Welcome to the Twomey Stock Market Report. I'm James Twomey, and today is May 9th, 2022, Monday. Today's segment, we want to talk about picking entries and exits, the bull and bear case. When you take a stock trade, or you've chosen a stock that you want to, or an ETF that you want to trade, not only do you want to pick the right entry and hope things go the way you believe they will, but you certainly want to put a stop in to protect your what I call principal. Even if you take a loss, a small loss, so that you can play again in the game at some further time, it's always a good thing, right? So you want to be careful. And how do we get to these stops, and what do we pick, and how do we choose them? So that's what I want to go over today. And also, too, I want to come back and talk a little bit about, last segment, we talked about trading the 200 EMA. Some very interesting developments today. And again, the market, when it goes down quickly like this, when we see rapid destruction, market tends to go down like an elevator, very quick. It goes up a very slow stair step, like an escalator, right? So markets move very quickly down. It's very emotional. A lot of negative news all comes out. And then all of a sudden the market turns around. So we want to come up with some ideas how to help ourselves control that and make some decisions. So let's see. One of the things we talk about in our process was tips, Twomey's investment processes. What were those? We talked about them earlier, but let's just remind ourselves, okay? The Twomey investment process, general market trend. Is it up, down, sideways? Macroeconomic conditions, we talked about those. We want to revisit that before we make a trade. Is there anything major happening out there in the market, or is everything pretty much, continues? Environmental factors, was there any major changes to those? Or are they continue to be the same? And then put those in a blender, if you will, come up with a short-term trend, right? So, all right, so general market trend. Simple enough. We look at, I tend to use either the Dow. It's pretty easy to track daily basis. I look back since the beginning of the year, 5 months. It's been a downtrend, right? Well, certainly today, we had major destruction. We had quite a bit of drop in the marketplace. Same thing Friday, same thing the day before. So the trend is accelerating in an area that we talked about, right? So we know the trend's still down. Same for the other industries. Some, mostly are worse than the Dow, but certainly down. Macroeconomics, environmental factors, nothing's really changed. There are some things starting to develop that we need to be aware of. As markets rapidly decrease here, even without interest rates rising, companies are going to start pulling back their horns, because you've read in many of these websites there, these tech stocks, other companies, last several days lost billions in market cap, and that takes not only psychological impact, but also, the CEOs and the CFOs start saying, wait a minute, we're losing stock value. Our job is to return stock, value to our investors. And they're going to look at ways to keep that balance sheet positive. They want to be able to end the quarter positive, meet their numbers that they put out there. To the point where, do I have to lay off people, or do I have to stop major advancement and technology innovations? Do I need less people? So all that's starting to come into play now as the market deaccelerates, and quickly. Okay, but pretty much nothing's really changed. So now we come to our short-term trend. Well, the short-term trend, how do I come up with that? I really come up with my entry points based on technical indicators. Why do I use technical indicators? Emotion's great. My bias that the market's going down, that's great. All my environmental, that's great. But it's really, and that's building my theory, right? My trading process, my theory, my ideas. But it's also starting to develop a bias. And what if my bias is wrong? I want to have something mathematical available to tell me, to wake me up, right? And convince me that my bias was wrong. Or maybe my bias is correct and, everything's going well. And then all of a sudden there's a major change. Well, I want something technical out there, an alarm bell to come off and say, wait a minute, Jim, you got some really good technicals there. Bias there, but it's changed. You got to start changing your thinking, or you got to start looking at what's going on in a little bit more deeper detail. So that's why I come up with these technical indicators. All right. And also show you go short or long. All right, let's dive right in. This gets a little bit in the weeds. I've got a lot of comments to maybe go into something more like a stock trading 101, platforms, what to use, how to track stocks, etc. And I think I should do that in future segments. But for now, I want to continue with this trading theme, especially since we just did the 200 EMA, should we trade or not? And today was a perfect example of either proving or disproving that bias, right? And that technical indicator. So some good examples. I want to stick with that. All right, so let's get technical indicators. What do I do? All right, so short term, here's the Dow. It's definitely in a downtrend. I want to look at the inverse of that because it's going to set my example a little bit easier. The inverse is the short or the dog, right? Dog is the ETF of the inverse of the Dow long. So every time the Dow goes down, the dog goes up. Pretty simple, right? All right. So now, how do I, and I also have told you I've been short for a while in the market. And I was kind of thinking there was going to be a bounce, but today it wasn't, right? All right, so this really is a good chart. I'm looking at the daily right now, and I say to myself, what am I using as technicals? Well, number one, way down here at the bottom is a fast, stochastic, and slow, right? What is all that about? It's an oscillator. It's based on some, mathematical formula out there. It's well used out there in industry. I set it up so it's a fast oscillator and it rapidly changes, but it's set from 0 to 100. But what I do is I look for, if I'm watching a stock, what do I do for my entry points? One of the things is I wait for this, if it's been down here, I wait for the green to cross about the red. That starts telling me market indicated things are getting positive. And in this case, this stock was down pretty low. It crosses over. That's my first indicator. I watch that for a while. The stock's coming up. And then I wait and I look up at my MACD. MACD is my second technical indicator. It's a little bit slower oscillator. This particular one, it was... I wait for the green to cross above the red. This is a little bit harder to see. I don't know if I could even get it to show, but down here we get some positive crossover. So the green is above the red. It's up in the 80% here. We start getting the MACD to cross positive. I look up at my price chart. Right, my price chart says, well, my price is below my technical indicators up here. What is that? I have a black line. That's my 10 EMA, just like the 200 EMA, but it's much shorter duration. And then I also have above that, in this case above that, a 15 EMA. These are moving averages, all right? So right here, my alarm's telling me, hey, I'm getting some positive bias on the upward trend. I now get, this green crossing above the red. I'm like, hey, alarm bell 2. I want to start thinking about taking a long position on this stock. But I go up here and I'm not going to move until the two things happen. My stock price starts using the 10 EMA as a support, right? And sure enough, it's been below, right? All over here, it's been below here. After my second alarm goes off, it starts to go above and it starts using it as support. It crossed down below here, so I still haven't made a decision, right? But what I wait for is when in this particular case, the 9 is below the 15. I want that 9 to cross above the 15. Once it crosses above the 15, and it has here, I got my second, the second alarm bell. The green is definitely crossed above the red and it's heading above 0, right? There's my 0 line. It's crossed above. This has had multiple times that the green has gone above the red, and now it's up in the 77% range. This crosses above, that's where I go in. So some point at this point in time, that's where I go in. Right? Now that I'm in the market, I have to get a stop. So the stop for me in this particular day was I'm going to go to the last inflection point or the last low. It's quite a big drop, but I need some room for it to grow. So my stop's down here at like 31.95, 31.9. Okay. And I'm in it, let's say it was 32, 33. So that's not bad. I got a little bit of destruction there, but I've got a good stop in here. So now above, I watch. As long as this stays above my 10 EMA, I stay in. Stay in. Stay in. Stay in. Stay in. Right? As long as it's above the 15 EMA, I'm staying in, I'm staying in, I'm staying. Even here, it gets up here, and I'm like, things are going pretty good. And I see it dropping down one day, and then it really drops down the next day. What am I going to do? It crosses below the 200 EMA. I'm starting to get nervous, right? Right? And sure enough, it crossed below the 10 EMA and then also the 15. I get stopped out because what have I done? Every time this market has gone up, I raise my stop to the 20 EMA. Right below it, just a tad below it, because I'm going to think it's going to use it as support. So I've always raised it up. On an up day, I raised it. So here we are here. It went up. I raised it up to here. Next day it goes up. I raised it up the next day. So I'm up, my stop's from 33. Big change from 31, right? 31.9. So now I'm up to 33. It goes up here, and I've got my stop up at, at the end of the day, I change it. It's 33.3. Screams up here. I've got my stop. I've raised it up to about 33.5. Everything looks good. I'm looking at my alarm bells. Well, geez, in the morning I get up and I realize, hey, this dropped down below here. This is alarm 1, right? But up here, everything's still, the green's still above the red, so I'm pretty good. However, I did get stopped out here. There's no doubt. So now I have to make a decision. Do I want to get back in? Came all the way back down here. I'm like, short in the market. Things are looking good, positive. And that happened to be, I think, the 1,000 point up, 1,000 point down day. And then I was able to jump back in, and well, we're in the same scenario. Where's my stop? My stop's following this 15 EMA. And the 200 EMA is definitely support. So I've got my, I'm back in the market and I've got my stops there. So that's how I kind of determine my technical indicators. Let's do the flip side on that. The flip side on that is the long side, right? And would I take a long position here? Let's do the reverse analysis here. Look at here. The green is below the red on our fast stochastic, which is a very quick oscillator, and it's way down here near 0. Well, it's getting at the bottom, and usually at the bottom you're going to maybe have it, usually when bottoms are hit, it's going to bounce up, right? But we don't know that. It could. So I look up here, the MACDs, green is still below the red. No decision to be made here. I'm still, there's no sense going along. Then I look at the actual chart. Wow, my 10 EMA is way up here, right? My 15 is way up here. My 200 EMA is way up here. And there's, we haven't even talked about the 50 EMA, and I will at some point, but not today. I look back and we talked about this last time, the lows. It had a low of the year, came up, tried it, tested again, took off. And it came all the way back down. You've got like a half a moon here, right? It looks like tested it and it bounced up again. all on the same day, right? Then very quickly it comes down and it tests it again. And that's where we were last week on the weekend segments. And I was saying, geez, if it comes down and it goes below or tests this low, watch out below. Well, it tested it, and now it's below that. I want to wait at least a day, if not two, for conviction. If the next 2 days are, close below that last low from out here, it was my support line, then I know it's going to start becoming resistance. And then what's next? Well, the next low, oh boy, next major low we had below that was way back here, which was January, March 2021. So that's this green line here. So that's 306, and we're at what? 321, something like that. Wow. That's 20 more points down. That's almost 10%. So let's take a look at the weekly to get a little bit better. Oh boy, weekly. See, that's even better picture, right? It's more. It's more the a week's got more data. It's a smoother type curve, if you will. So here you go. This last low, and we broke through that today. And we got the rest of the week to go. So will it end up staying below that? Well, it could, but that's telling me the bias is still down. Do I want it to play a bounce? I have to wait till the market tells me. So I have to wait till my technicals tell me. Right now that we've got we haven't even come up to none of the stochastics, the MACD. Our price hasn't even come up around where we'd like to be trading, right? If you look at the dog, the opposite, the inverse, right? We're using that. Once the stock got above that 10 EMA, we kind of use that as, see how it bounces off that 10 and 20, 10 and 15. That's why a lot of people use like 10 and 20 or 15 and 20, because it's that moving average gives you a little bit more time to react. But we're getting fast swings in the market. We're getting major destruction. These technicals have to tell us is the trend changing. Right now, it's not. One thing I will say though is we came up the Dow, the inverse of the Dow, what we call the dog, right? It broke here, high point there, and it kept going up. We had a high here and a little bit of reversal below the 200 EMA, and then went up and we got another high here. Now, the next high is up here, and we broke that today. The next high up here, we broke that. So the bias is that it's heading towards previous highs and either surpassing them or exceeding them. So my guess is, and that's a guess, that we're probably headed up around here somewhere before this starts to reverse or go sideways. But we don't know. I'm not gonna theorize. I've got my stop down here around between my 9 and 15. It's up to you which way. We're talking either 30, 34, or 33.7. But that's where your stop is. Quite a big difference, right? Because it closed here, I think, at 30. What did it actually close at? 35, let's say, 34.94. And if you've got your stop down here at, 34, 33, that's not too bad. A little bit of when I see big gaps like this, I may want to pull my stop up to the last low, but, kind of tempting the market to take me out. It depends how much I have in there. But I'm moving my stop up. I didn't leave it down here. I'm protecting my gain. If I get stopped out, then I have to make some quick decisions. I use my technical indicators. And what I'm going to do is leave it here because it's a little bit in the weeds. The next segment, I'm going to talk about earlier time frames versus the daily and weekly, and how I can use earlier time frames to predict maybe where the daily and weekly are going to go. No guarantees, but it can give me some early warning signs. So the next segment, we'll go over again the slow, the fast moving stochastics, the slower MACD as my alarm 1 and 2, and then in my daily chart, I'm using most likely the 10 and 15, or you can use the 10 and 20 or 15 and 20 exponential moving averages as my go in or get stopped out. All right. We'll go over it again, but the next time we're going to look at shorter time frames. It's a little more real time, and then I'll be, we'll probably talk about the 60 or 90-minute chart, and the 120-minute chart is what I look at, and how does that predict the next chart, which 60 to 90 to 120 to daily, right? Maybe it'll get a little bit clearer there, but so when I'm looking at a stock, if I'm interested in going short or long, not only do I look at the daily and all my technicals, but I also look at the weekly. Is that, kind of convince me of my bias? Those are the Twomey investment process about the trends. And then I'll look at the 60 and 120 minute, and I'll see what's happened there. It's a quicker cycle of the daily trade or the daily market. And is that proving especially with the technicals, that my bias has been correct? It's been either going up or down. And I'll show you how to use that. Sit on this, let this sink in. If you are trading and you're not using some of these for your stops or your entry points, start thinking about it. Google, slow and fast stochastic MACD. They'll give you the time frames that you want. When I go into my one-on-one stock trading, I'll go into that in a little bit more detail. And I'll just leave you with this. I want to quickly look at the 200 EMAs ones that we talked about yesterday. I think what's one? Tesla. That was because it kicked off, and a couple of my kids were like, "Hey, why don't we just wait and hold in?" I'm like, "No." They're older. They're out of the house and doing their own thing, but a couple of them still like me to help them in investing in their trading in their accounts. So I said, "Nope, we're out." Tesla, remember we had the 200-day moving average hit in the the daily 1, 2, 3, 4, 5, 6, 7, 8, 9, in a bunch of days. So I was looking at that. Hey, it very rarely comes down there. When it does, when the market, it tends to bounce, right? It came all the way down and it bounced up. And it was definitely going sideways. Took a position, took even position for my kids. And I had to stop pretty low, down below the last low, which was around 820 or 800. Yeah, it was 825, 820, whatever it was. It kicked off today, and I'm out, of that trade. I'll have to wait to see where things go. Right now, I'm not in a rush to get back in. I need a couple of days of conviction if it starts going up. And then I have to be convinced that 200 EMA doesn't become resistance. Tesla's a fast mover. Things can happen quickly in 24 hours. But for now, that 200 EMA, it didn't work. So, let's wait. The other one was, I think, U.S. Steel. That kicked off as a sale for me today. I had it. It was around a little bit above the 200 EMA. Blew right through it. Went through my stop. I'm out. At this point, I'm going to wait a day or two because this is a market. My suggestion to most people, it's a good time to learn and follow. I'm not sure, if you want to take positions, make them small. If you're good at, trading short, certainly good time to be short. And if you are short, stay short until the technicals change on you. But I'm out here. The 200 EMA didn't work. It went through it. Now, if it reverses and comes up and hits that, and you can see that I got a bunch of other technical things here I follow, but for now, I'm out. What was the other one? I think it was UNH. And I didn't get a notice on that, so I'm not in. My entry point's down around here in this trend line, lower trend line. and the 200 EMA is way down here. So that's still, potentially something could change. XLU, the utility ETF. I'm still in that. It's nowhere near as 200 EMA. It's been going sideways. I got in down around here. So you can see, look here, the 10 EMA crossed down below. That's a time to get out, which I did. And, the only thing, I'm being a little aggressive getting in down here above the 200 EMA, but sometimes, like I said earlier, it never gets there. I want to give myself a few points to play. I'm in. It's still going sideways, but nothing's really changed down here. That my fast oscillator definitely down in 27, and the green's crossing below the red. Not very good. The green is still here on the fast MACD. It doesn't look good. It's way down here at the bottom in the zero, negative 0.4. Chances are this is coming back down. My stop, I've raised it up to the last low here, 69, because if it goes there and then maybe bounces, the 200 EMA is definitely going to come into play. So that's still in play. That's a good one. Microsoft, definitely out of Microsoft now. That again was one that went below the 200 EMA. It kind of was bouncing using the 10 EMA as kind of support. It broke down below there. It's now third day that it broke down. The pictures are telling me down, down, down. Stay away. It is hitting this lower trend, but for now I'm staying away. Because even if it bounces back, the first thing it's going to go past is this 10 EMA. Then it's going to get past the 20 EMA, and then I need these to cross, reverse course and have the 10 over the 15, and then it's got to get the 50, and then it's get the 200. So there's plenty of time to get in. But right now, this is negative, this is negative, this is negative. So there's no indicators for me to trade. I will look at the 60, 120 minute on something like this, but we'll do that in the next segment. And I think that covers might be another one we had, but I don't have it off the top of my head. But that was our 200. Should we trade it or not? Well, it looked like it wasn't a good time to trade. All right, so let's see. We went over our technical indicators, got deep in the weeds. We need to probably go do that one more time on the next segment. We'll look at shorter time frames, might give you some, and then maybe the third segment we'll do something. I'll try to do something real time. Next few days are golf days, but maybe at the end of the week I can do this segment during the trading hour, and then we could kind of follow it. We could take a look at it. Let's see. Okay, we're at the end. Finally, jim.netsearch@comcast.net. I'm sorry. I think I've given you way too much information tonight. I think it's gotten down into the weeds and got lost a little bit. So pardon me for that. We'll make it up on the next one. Increase on particular stock, as long as it's not a meme stock, let me know. There's some very interesting things going on. I'm looking, I was in oil, I was in natural gas. They all came down over 10% the last couple of days. I'm out. Actually, I'm shorting oil now. Maybe we'll talk about that in the upcoming segments. And right now, I just want you to be aware. Gold is coming way down. One of the reasons for that, there's a lot of, commodities are hard to trade. There's a lot of influence in commodities. It's also based on the future trading versus real time right now. The future price of what they're going to be bought and sold on the open market. Also, too, the U.S. dollar is screaming upwards. I mean, I don't know if I have the chart. This UUP. It's a trade I missed. I really did. Look at this. I mean, since the beginning of the year, it was all sideways. I usually don't trade the dollar because there's not a lot of, it's kind of like the utility talk I talked about in the last segment. It's really, but look at here. I had a positive indicator. I didn't get in, and I just kind of blew right past all the things telling me to buy. That was at 25 and it's all the way up at 27 here. So the dollar, as the dollar improves, we can buy things cheaper, right? When you go to Canada or Mexico and the dollar's stronger, right? You can buy $1 gets you 100 pesos. When the dollar is weaker, $1 gets you 50 pesos, right? So when we buy things, import oil, that oil's cheaper with a stronger dollar. Weaker dollar, oil's going to cost more. Makes sense, just like the pesos example I gave you. So one of the things that's going on, the dollar's getting stronger. As it gets stronger, gold comes down. Actually, I know a lot of people that are shorting gold. I usually don't like trading gold too much. But I can tell you this, as the market was coming down and we were hitting recessionary and inflationary periods, my portfolio started shifting over to more commodities: gold, silver, oil, natural gas. Of course, the war really, exploded with the natural gas and stuff. And I usually don't trade those. But when my portfolio starts shifting towards those, I definitely know that things have changed, right? So I also take notice when I get stopped out of those, because I don't like, I don't hang around a lot of them. They move really quickly. Like the natural gas has dropped 10% and 10% 2 days in a row. So you got to be careful, because there's a lot of different things happening out there, and it's affecting what's going on. Same thing with Bitcoin. Bitcoin seems to have been following the NASDAQ. It's also, as the dollar gets stronger and gold goes down, Bitcoin seemed to me earlier on that more people were going to go into Bitcoin or ETF with Bitcoin. And I'll show you the one I trade, one of these, segments. But right now it's going down just like gold is, and the dollar's getting stronger. So be careful if you're trading commodities. It's very risky. And right now, watch the dollar. If the dollar starts to flatten out here or come back down, then the commodities will come back in favor. All right. That's it on that segment. Any particular stocks, email me, ask me. I've gotten some inquiries about trying to do a one-on-one stock segment. I'll do that in the future. I think that's a great idea. Input on previous segments, keep it coming. I love it. Jim.net, search at Comcast, or on YouTube. There's ways to post discussion panels. You could do it there as well. Any topics that you would like covered, terrific. And, definitely hit the like button. Hit follow so that when new segments come out, it'll show up in your inbox, and or email me and I'll send you a note when when I post. All righty. Have a great trading day tomorrow if you're trading. And remember, if you're in the market, you're trading to make money. That's as hard as it gets, and that's as simple as it is. And some of the things we talked about today will hopefully prevent you from losing or being in a stock and waking them up, hey, I'm 10% down. I always use these examples, and I'll bring up more where in the past I had a buddy one time. When I first started trading, he goes, "Oh, if I put my stops in when everything goes down 10%." Well, when Tesla, I'm buying it at 800 and it goes down 10%, that's $80. That's quite a bit. So anyways, we'll talk about it, and in future segments. We're going to stick with this theme about technical indicators. I promise you it'll get clearer. I really do. So stay tuned for the next one. I'll try to get it out next day or two. Thank you so much. Bye now.